So equity. What in the world is equity? Well, to get there, we first got to look at the balance sheet. I know we're not going to spend too much time on it, but the balance sheet is actually pretty simple. There are three parts to the balance sheet. And first part we see is assets. Now, assets are things that we own or control that have value. So if you're looking at the balance sheet of a company, you're going to find things like cash, investments, or property and equipment. The second part of the balance sheet you'll find is liabilities. It's stuff that we owe, bills that we haven't paid, debt that we've incurred. Liabilities are things that we owe. And the third part is equity. Now, equity is the portion that we actually own. And on the company's balance sheet, you'll see things like common equity, retained earnings, shareholders equity, things of that nature. Now, let's take a look at an example of a balance sheet. This is CVS Health's balance sheet. You'll see the same three parts. At the top, we have our assets, nearly $233 billion in assets. Now, they have financed a lot of those. In fact, they owe about $157 billion against those assets. That's made up of bills they've got to pay. It's made up of long-term debt that they have. And then finally, we've got equity down at the bottom. They've got about $75 billion in equity. Okay, so let's focus on that bottom part, $75 billion in equity. If we go look at just that part, remember, this is the portion that their shareholders actually own. So if you look at it, we see common stock. We see retained earnings. In fact, those are probably two of the most important parts of what you'll see in the equity session. That means that they have investors that own a part of it, and the retained earnings part is actually the accumulation of all of their income that they've earned since the inception that they haven't distributed back to investors. So equity is theoretically the amount that owners, or in this case, shareholders, would get back if all of the assets of the company were liquidated and all of the debt paid off. It's whatever's left over, and it's the portion that shareholders actually own. Other words that you might hear in connection with equity. Depending on where you are, you might hear things like net worth, owner's equity, or the book value of a company. All of those are the same thing. We're talking about total equity. So remember, to grow equity, there are two major ways that you and I have a direct impact on. First of all, we can grow profits. That's seen as retained earnings in that equity section. The second thing we can do is we can pay down debts. Now, it doesn't seem like we could actually pay down debts, but you and I are responsible for driving the cash flow that we use to pay down the debts. So that's equity. It's stuff that we own. And there are two ways that you and I can impact it.